12,000 metric tons of American pork. That's a lot of pork.
A huge amount.
Already paid for, already sailing towards China, and then suddenly it just vanishes overnight.
No warning, no real explanation, just canceled.
It's a real head scratcher, isn't it?
It is. And the scale, the suddenness. It wasn't just a minor hiccup or a rerouting.
Well,
This was a flat-out cancellation. A huge shipment already in transit. It feels like something bigger than your usual trade spat.
exactly. It feels less like a business disagreement and more like a surgical economic strike. And you start to wonder, is this maybe the opening shot, in a new kind of conflict where things like pork, everyday goods become weapons?
Well, if you look at the broader context, it definitely suggests things might be changing. How economic power is used and the silence around it, that's almost louder than if they'd made some big announcement.
Totally agree. So that's what we're diving into today. We want to get to the bottom of this disappearing pork
Figure out why it happened.
and look at the ripple effects, beyond the farms. And maybe even think about what could be next. Some analysts are even whispering about the US dollar.
Which raises that key question immediately. Why pork? Why right now? And why so quiet about it?
Okay, let's nail down the timeline of the cancellation itself. It's 2:42 a.m. Beijing time, April 18th.
Middle of the night.
Right. And that's when the directive goes out to Chinese importers. Cancel. Cancel those 12,000 metric tons of U.S. pork. Pork that's already on the water.
And it's crucial to understand the order wasn't hold it or send it somewhere else.
No.
It was cancel. Full stop. A clear signal. We don't want these goods.
And this wasn't just rumor. Big names, Bloomberg, Reuters, they confirmed it. And the ports, Ningbo and Dalian, where the pork was headed, they just stopped processing clearance immediately.
And still, no official public reason from China. But everyone looking at it could tell this wasn't, just routine paperwork trouble.
No way. This felt planned, premeditated.
And that volume, 12,000 metric tons. Let's put a number on it. Based on April's average prices, we're talking roughly, $35.4 million?
About that, yeah. $35.4 million worth of pork. Just canceled.
Which circles back to that big puzzle.
Now, why? Why walk away from $35 million of perfectly good pork that you've already paid for? It's processed, it's literally on a ship heading your way. What is the play here?
To even begin to understand that, you kind of have to look at what was happening right before this, the context, specifically with U.S.-China pork trade.
Right. Because just 3 weeks earlier, March 25th, the Trump administration hit pork coming from China with this huge tariff, 172%.
A massive countervailing duty.
Yeah. And the official reasons given were alleged illegal subsidies and some veterinary regulation stuff.
Now, what's really interesting is how China reacted, or rather how they didn't react initially.
Exactly. Silence. Normally, you'd expect a quick tit for tat, right? Retaliatory tariffs, angry statements.
Nothing public.
But nothing. Just quiet.
And then, boom, this very targeted cancellation of U.S. pork going to China.
Now, some reports, based on internal briefings the South China Morning Post got hold of, they suggest this wasn't just a gut reaction. They're talking about something called a precision decoupling doctrine, a new playbook, maybe?
It sounds like it. A way to respond very specifically, very surgically. Dr. Hao Wu from Fudan University put it quite starkly. He said, it was about showing the U.S. that even legacy commodities, things we think are stable trade, are no longer safe.
Wow. Okay, so that reframes it completely. It's not just trade anymore. It's a message, a strategic demonstration.
Precisely.
So who felt the immediate impact? Well, flip side of the coin, places like Brazil and Spain, they were apparently pretty happy.
Reports of new orders flooding in almost immediately. By the next morning.
Meanwhile, back in the U.S., a big shockwave for the pork industry. The National Pork Producers Council, the NPPC, said this one cancellation created an instant backlog, nearly 26 million pounds of pork.
26 million pounds, that's hard to even picture. It's like, 110,000 market-ready hogs suddenly had nowhere to go.
And the timing, awful. Domestic supply chains were already dealing with a seasonal surplus.
Right, so this just throws gasoline on the fire, a huge amount of extra pork suddenly stuck in the U.S. market.
It really shows how one targeted action like this can ripple out, doesn't it? It destabilizes the whole domestic supply chain, not just the farms that were exporting.
And the pain wasn't spread evenly. The states hit hardest were the big pork exporters to China. Iowa, North Carolina, Minnesota.
They account for, what, almost 60% of those exports?
That's right. The Iowa Farm Bureau put a number on the initial hit just in their state. $9.7 million in direct losses. And that's just day one, essentially.
Using the dominoes start falling, right?
Exactly. Hog auction prices just tanked.
Processing plants are overwhelmed. They can't handle the sudden glut.
Which leads inevitably to layoffs. There was one processor in Worth County, Iowa, I think, laid off 117 workers.
Just like that, within 48 hours.
Within 48 hours. It really drives home the human cost behind these big economic chess moves. Real people, real communities affected.
Chris Novak, the CEO of the NPPC, he called it a vacuum. Not just a disruption, a vacuum.
And markets hate a vacuum. Someone always rushes in to fill it.
Oh yeah, the stock market noticed, all right. April 19th, the day after the news broke widely, Tyson Foods shares down 4.3%. Hormel down 3.1%.
But here's where the analysis gets really interesting. You had different firms seeing it very differently.
Right, like Citi Research played it down, said it was probably just isolated retaliation for those earlier U.S. tariffs.
But then you had Morgan Stanley sounding a much bigger alarm. They warned this could be a sign of a major structural pivot. China fundamentally changing how it buys protein.
And that difference in opinion, it highlights a potential blind spot maybe.
Could be. Are markets looking at this too narrowly, just seeing short-term volatility in agriculture?
Instead of seeing the bigger geopolitical picture that might be unfolding.
Possibly. Look at the futures market. The CME Lean Hog Futures Index dropped 6.5% in just 3 days.
6.5%, that's huge.
Steepest weekly drop since the chaos back in 2020.
Wow.
Chen Jun Pan over at Rainbow Bank said something interesting. He said, markets are pricing this like a one-off, but China is signaling a long-term shift.
And the actual trade numbers for April seem to back up that more worrying view, don't they?
They really do. While U.S. producers were reeling, Brazil saw its pork exports to China jump 28% in April alone.
In Spain.
Spain's Interport Group reported a 23% year-over-year jump in orders from China. And get this, they apparently got new fast-track customs clearance in Shanghai right after the U.S. cancellations.
Huh. That doesn't sound like a coincidence.
It certainly sends a signal.
So what does that do to market share overall?
It's shifted dramatically. Brazil and Spain together now supply nearly 48% of China's imported pork.
In the U.S.
Down to just 19%. Remember, it was 33% just the year before in 2023. That's according to China's own customs data.
That is a massive swing in such a short period. I wouldn't have guessed it was quite that stark.
It's incredibly fast. Alicia Garcia Herrera at Matixis, she summed it up perfectly. She said this isn't just trade diversification, it's, quote, strategic replacement.
Strategic replacement.
Her point was the U.S. isn't just being outcompeted on price or quality here, it's being outmaneuvered.
That's a really key distinction. It implies intent, strategy.
Exactly. Which leads to maybe an even more concerning piece of the puzzle, these reports of unexplained delays, problems with customs approvals for other U.S. pork producers.
And this started even before the big April cancellation, like back in mid-March.
Apparently so. Internal USDA messages, Bloomberg saw them, flagged these issues popping up.
And we heard from companies too, right? Smithfield confirmed they had shipments held up for ages, supposedly for inspection.
Yeah, unusually long inspections. And JBS USA said communication just broke down on several pending deals with Chinese buyers.
So what's behind that?
Well, China quietly updated its import rules around that time. They brought in stricter requirements, things like supply origin transparency, biosafety standards.
Stuff that maybe not all U.S. plants currently meet.
That seems to be the implication. Some U.S. facilities might not be aligned with these new, tighter protocols.
So it acts like a silent filter.
Pretty much. It lets them effectively block or slow down imports from specific U.S. exporters.
Without actually issuing an official ban, which could trigger a WTO case or something.
Right. It keeps it technical. It's a very subtle way to apply pressure. This isn't just the one big cancellation. It's maybe a more nuanced, ongoing squeeze.
Daniel Portman, a trade lawyer, he called it a de facto blacklist under the cover of technical compliance.
That nails it, I think. It's clever, strategic, reduce reliance on the U.S. without a big public fight or breaking trade rules.
And the scary part is, if they can do this with pork.
What's stopping them from using similar tactics elsewhere, other sectors?
Yeah. It starts to look less like a one-off incident and more like a potential playbook, sector-by-sector economic disengagement.
And the wider economic fallout from just this pork situation, it's already visible. By late April, USDA data showed U.S. pork in cold storage was way up.
How much up?
14% higher than the year before. That's about 634 million pounds of pork sitting there.
And all that extra supply has to push prices down.
Absolutely. Wholesale prices for things like pork bellies, pork loins, they dropped 17% in just 8 trading days.
17%. That's huge. No wonder we started seeing big discounts at the grocery store, even from places like Kroger and Costco,
Yeah.
trying to move that product.
Yeah, unseasonably deep discounts. But domestic buyers can only soak up so much. There was a Wells Fargo report recently.
What did it say?
It warned that if this export pullback continues, farmers' profit margins, the farm gate margins, could get squeezed by over 22% within just 1 quarter.
Wow, 22%. That could be devastating for some producers.
Especially the smaller independent ones. They often run on thinner margins to begin with.
Are we seeing that happen already?
Sadly, yes. There were reports in April of at least 6 independent hog farms in Missouri filing for Chapter 12 bankruptcy.
And they blamed this situation.
Directly cited the inventory overhang, the suppressed prices caused by this export disruption.
So you can really trace it back. That one canceled shipment. The elicts just cascade down through the whole system. Farms, processors, workers, even local economies.
It's a stark reminder of how interconnected everything is.
Okay, but here's where it gets potentially much bigger, right? This whole pork thing.
Yeah.
Maybe it's just the warm-up act.
That's the concern. Back in January, apparently, Beijing quietly approved a new 5-year plan for food security.
And what's in it?
A very specific goal. Cut reliance on strategic food imports from, and this is their term, politically unstable suppliers by 40%.
40% reduction. By when?
By 2028. So looking beyond just the immediate pork fallout, this seems like part of a much bigger, longer-term Chinese strategy. We should probably dig into that food security plan a bit more.
Okay, politically unstable suppliers. Does it name names?
No, the U.S. isn't explicitly named, but analysts at places like ING, Rabobank, they read between the lines. They think it's a pretty clear reference.
So this isn't just about pork then. It's about a fundamental strategy shift for China's food supply.
Seems that way. And they're putting their money where their mouth is. Since 2023, China's domestic investment in agriculture quadrupled.
4 times.
Yep. And they've built a mind-boggling amount of new grain storage, over 80 million cubic meters.
Wow.
Plus, they've been locking in long-term deals for pork and beef with other countries, Brazil, Spain, Argentina, securing alternative supplies.
Are we seeing shifts in other major U.S. exports yet, like soybeans?
We are. U.S. soybean imports into China were down 25% in the first quarter of this year, 2025.
A quarter down.
Who's making the difference? Brazil and Paraguay, mostly. Reuters confirmed that with trade data.
There was a quote from Darren Friedrichs at Satoni Consulting. What was that again?
Yeah, it was insightful. He said, China is treating food security the way the U.S. treats semiconductors.
Dating.
Meaning it's a top strategic priority, absolutely critical. And part of that is reducing vulnerability to any single supplier, especially one they see as potentially unreliable or, well, political. So less dependence on U.S. exports, whether the disruption is intentional or not.
It's about building resilience. Makes sense from their perspective.
So if pork was maybe a test case or the first step, what else is vulnerable? Think about major U.S. agricultural exports to China. Soybeans, obviously. Corn. Beef.
How much are those worth?
In 2024, just those 3 were over $22 billion. Agriculture is the second biggest U.S. export sector to China, right after semiconductors. So for anyone listening, maybe thinking about their own investments or industry, it shows how these big trade shifts can echo far and wide.
In Q1 2025 data already shows those imports from the U.S. shrinking.
Sharply. Soybeans, corn, beef, all down significantly from the U.S. Meanwhile, imports of the same things from Brazil, Argentina, way up.
And didn't Bloomberg report something about COFCO, China's big state-owned food importer?
Yes, that they're actively letting contracts with American grain suppliers expire, just not renewing them.
And shifting that business where?
To partners in South America, what they call Mercosur partners. You know, Argentina, Brazil, Paraguay, Uruguay. Another clear pivot.
And then there was that big deal with Russia in April.
Right. The landmark food security deal. It's a 20-year agreement. Gives China preferential terms to import Russian barley, wheat, beef.
So effectively locking in another major alternative source, bypassing U.S. producers for key commodities.
Taken together, these don't look like random market fluctuations. They look like contingency plans for a broader economic separation being rolled out quietly, starting with agriculture, one commodity at a time.
It brings us to the really big, maybe uncomfortable question.
Yeah.
If China can do this with pork, this kind of surgical, quiet phase out, What happens if they decide to apply the same approach to other critical areas?
Like semiconductors, pharmaceuticals.
Or even U.S. debt,
Or-
treasury bonds?
The potential fallout becomes, well, enormous. The next cancellation might not be a shipload of pork
Right, it might show up differently, like a sudden spike in bond yields that nobody saw coming.
or a major sell-off on Wall Street, or maybe critical supply chains just start seizing up.
So, wrapping this up for you listening, that pork cancellation, it wasn't just a lost sale for some farmers.
No, it was a signal, a deliberate strategic move.
With potentially huge consequences that ripple way beyond just agriculture.
And what's really striking is the apparent sophistication behind it. The long-term thinking it suggests on China's part. It looks like a very calculated move. Minimize the disruption to themselves, maximize the potential impact on the U.S.
So what does it all mean for you? Well, it really forces you to think about how tangled up the global economy is, doesn't it?
Mm-hmm.
How something that seems distant, like a canceled pork shipment, can actually have unexpected shockwaves that reach surprisingly far.
It definitely raises questions about how international economic competition is changing, the potential for these kinds of subtle, targeted moves to really reshape global trade.
Exactly. So maybe the provocative thought to leave you with today is this.
Go on.
What if the real economic decoupling we hear about? What if it isn't going to be loud? No big tariff wars splashed across headlines.
But instead,
Instead, it's a series of these quiet, carefully planned cancellations, sector by sector, commodity by commodity. And if that's the case, maybe the biggest move China's planning hasn't even happened yet.